Whether you're a first-time buyer, veteran, or somewhere in between, government-backed loans can help you get into a home with less money out of pocket and more flexible qualification requirements. So let's explore the three main types available in California. First, there's FHA loans. Now FHA stands for Federal Housing Authority, and these loans are insured by them, making them less risky for lenders and allowing them to be more flexible with qualification requirements. For instance, FHA loans allow you to qualify with a credit score as low as 580 if you put down at least 3.5%, or even with a score between 500 and 579 if you put down 10%. Conventional loans typically require at least a 620 credit score. Your debt-to-income ratio can be up to 43% with an FHA loan, which is higher than conventional loans. And sometimes your credit score and debt-to-income ratio can be even more flexible if you have compensating factors like a large down payment or significant savings. Now, unlike conventional loans, FHA loans have two types of mortgage insurance. You'll pay an upfront mortgage insurance premium, which is 1.75% of the loan amount. And this is typically rolled into your loan balance. You'll also pay monthly mortgage insurance premiums. And if you put down less than 10%, this monthly insurance stays for the life of the loan, which is something to consider when calculating long-term costs. But here's where FHA loans get really interesting. Did you know that you can use down payment assistance programs to cover your entire down payment? That means you could buy a home with an FHA loan using someone else's money. Now, not all states allow this, but California is one of them. So if you're looking to buy a home in California with an FHA loan, make sure you check out our website to see how much down payment assistance you may be able to get. Next, there are VA loans. Now, VA stands for Department of Veterans Affairs, and these loans are available to eligible service members, veterans, and certain surviving spouses. While the VA doesn't set a minimum credit score, most lenders require scores between 620 and 640. Like FHA loans, VA loans also require mortgage insurance, but you won't pay private mortgage insurance. Instead, you'll pay a VA funding fee, which ranges from 1.25 to 2.15% of the loan amount, depending on your down payment and whether it's your first VA loan. This fee helps sustain the program, but it can be rolled into your loan amount, so it's not a separate cost on top of your down payment. And some veterans with service-connected disabilities are exempt from paying this fee. And finally, there are CalHFA loans. Now, CalHFA stands for California Housing Finance Agency, and these loans are specifically for first-time home buyers in California. Each CalHFA-approved lender will have their own requirements, but generally they consider your credit, income limits, and other requirements set by CalHFA. To qualify, the home must be your primary residence, and you'll need to complete homebuyer education counseling, which is free through approved housing agencies. CalHFA loans often pair well with their down payment assistance programs, which we discussed in detail in Episode 2. In addition to CalHFA's conventional loan, they also offer an exciting loan called the 100 by 10 loan. With this loan, you can finance up to 100% of your home's value, including closing costs, and you only need a 3% down payment. But you'll need to meet specific income limits, which vary by county. You can find those limits and more information on the CalHFA website. So which loan type is right for you? Well, that depends on your individual circumstances. An FHA loan might be a good option if you're a first-time home buyer or have a lower credit score or down payment. A VA loan could be a great choice if you're a veteran with less than stellar credit. And a CalHFA loan is a good option if you're a first-time home buyer in California. No matter which route you choose, make sure you watch our next video about house hunting to closing so you can avoid them during your home search. We'll see you there.